Because today was a banking holiday, the volatility in the markets were probably a little bit less than normal. As we saw, the Dow didn't do too much of anything, but notice the indecisive trading up here at pretty much where wave 3 and wave 1 are approximately the same in this J-hook pattern. That would give us a little bit of suspicion that there might be some profit taking, somewhat the same nature as this right here. Now, is it going to pull back to the T line and stop there? We don't know. But if we see weakness, it's a good time to take profits in stocks that are starting to show some selling. The S&P 500 showed further evidence of selling with a bearish left-right combo, evening star type signal, with the possibility that if it opens lower, they're coming back to test the T-line. So this, when you see more than one index or all the indexes start selling off a little bit, that means money is starting to come out of the market. There might be some profit taking. However, the benefit of candlestick analysis is that you can still stay in stocks that aren't showing weakness based upon our recommendation last week of VNET, V-N-E-T, after the best friend signal, gapping up off the 50-day moving average, creating a J-hook pattern. And today's positive trading telling us that they broke out through this level, putting the prospects of a J-hook pattern, creating another wave of this magnitude in place. So even though the markets in general might be selling off, the candlestick investor has the benefit of seeing which stocks are still going to remain strong, even if things are starting to roll over. And having the ability to analyze individual charts, such as gold prices, as you can see, gold prices did a spinning top, gap up through the T-line with the prospect that they could bounce it back up here to the 50-day moving average. This gives us a very strong indication that the gold stocks are probably going to move well. This allows investors to have a step up in their advantage of seeing how a price is going to move, such as in the Nugget, the gold miners bullish fund, leveraged fund. If it opens positive tomorrow, because gold is trading positive, that tells us we probably have a good strong day based upon a doji sandwich breakout of the 200, taking us up into a much higher area. This also prepares an investor that if they're buying the stock or options, if they see it open in the correct direction after a doji, setting up a price pattern, they don't have to watch for confirmation. They can be buying immediately with much more confidence. The same is true on the bearish side, like in crude oil, where we're seeing crude oil prices starting to back off again, that you can look at charts that are starting to trade weaker in the crude oil area, so you can be short one sector while being long another sector. The advantage to candlestick analysis is that it demonstrates what's happening in each sector based upon human nature, again, based upon the signals that are created and then closing below the T line. That'll be it. We'll see you in the chat rooms.